Hello, hello. Can anybody hear me?
Can you hear me, Deb?
Hello, hello. Can you hear me?
Yes, we can hear you.
I'm gonna blow a gasket with all this. I don't know why Discord keeps kicking me. Everything just keeps kicking me out of everything. Okay, well, anyway, we got sound on again. It was off on my computer again and on Discord. I don't understand what's going on, but anyhow, now that we had that major move yesterday, we always want to look at the daily after a major move like that. All right, we want to see if any trend lines were broken or any, what's changing. So if we come out here to the daily time frame, I guess we kind of broke that the other day. If we were to go like this, so we got that break and then the retest and then the launch off. So that is good. But what's not good for today, can anybody tell me? All right, we got that. We've been waiting for that move all week, right? That's what we were anticipating, the big move up. That's why we weren't selling off any lower all week, right? We've all been talking about that. So we have this major gap to fill below us. All right, that is a massive, massive gap. All right, so knowing that, right, we got this ascending wedge pattern now. All right. And we're going to have, where did we close at yesterday? I mean, we're up 50%. So even from yesterday's open, we have a gap to fill. Now we have a gap to fill as well. Let me just look at where we ended up yesterday. I don't even have that marked off. All my charts, everything was like completely blank today. I'm telling you, if you guys had a clue what I've been going through the last couple of days, it's been a nightmare.
We closed at 11,652 yesterday.
All right, so right in this area. All right, let me go ahead and mark that off. If you didn't mark it off as well. I always make mine yellow, so it's easy. It's easily distinguishable. All right, so now we got two gaps to fill below us. Looking at everything, right? Remember we talked about how the market would like to buy cars in that area down at the bottom, right? Could you look at it like, where companies go to buy their product and where companies want to sell their product, all right? Now that we are up here, they're going to want to sell their product, right? There's going to be a lot of profit taking today, okay? A lot of people who went, even were long yesterday, they're most likely going to end up closing out at the opening bell. I mean, we do have this triangle here, right? Again, the same thing. Could we rise up? Remember, the bulls are going to want to bring this right back up here. So we got this major level, which is a major level on our higher time frame. All right, now with two gaps below us to fill. All right, you all saw what happened last time we had two gaps below us, right? So the higher probability play today, in my opinion, would be to come back up and test this area, get as many people they could sell to as possible, right? Because they're definitely going to be taking profits after a big move like yesterday, all right? So how would they trick people, right? Get them thinking we're going to break this out. They might even break it out a little bit just to get in more. They're going to have millions upon millions of shares to sell, okay? So they're going to need as many people going long that they can sell those shares to, all right? So what we're looking for today is the possibility of doing just what I said, right? They're going to want to come up and sell those shares to people, right? And who are they going to sell them to? All the bulls. All the retail traders, you and I, everybody trading the SPY, the QQQ, the Amazons, the Teslas, right? That whole community. right? They're going to be selling it to them because they know they'll be the ones to buy it, right? But, you know, smart traders aren't going to be looking to buy any of that garbage. We're going to be looking to sell just like they are. We're going to sell into that strength, all right? 2 gaps below us, okay? Here's yesterday's gap fill, and that's a massive gap in and of itself. I mean, you're talking a couple hundred points from yesterday's open. Again, we're gapping up today. I've been on social media today, and there isn't a bearish person out there, okay? It's the mentality of the herd, right? And you never want to run with the herd in this game anyway, okay? They're all going to get smoked. All right, so just the fact that we have 2 gaps to fill, all right, speaks volumes, and you guys saw that happen just last week as well, all right? So now, let's just say we're just coming in here now in the morning, right? We open up our computers, here we are. What do we see? What do we got happening here? All right, real quickly, I could probably identify, you know, if we started earlier, we had a little range, and then we could have went down to this range. But since we're on here together now, let's go ahead and set up the range that we're seeing, all right? And this is the range that I'm seeing right here. You got the top of it right here, which is really, really high. And the bottom right here, I'm going to double click. I'm going to change this to purple. I'm going to make it a little thicker just so we could really see it there. Wrong one. There we go. Alright, now we got that range, and then we'll go ahead and put a no trade zone in there. There we go, looks good. Beautiful. And now you guys can clearly see we're trading in the bottom, I don't know, 45% or so of that. You know, our goal would be to be trading in this bottom 25%. Okay? That would be our goal, but again, taking all the information we have into account, if we do begin, you know, trading in this area around the 9:30 time frame and it breaks, we're not taking that short, okay? Don't fall for the games, okay? This would be the time where, yes, it's in our favor. And you know what? I'm going to even go a step further and say, let's wait and see if we do get divergence, right, to the downside in that area. Let's just go ahead and wait and see. But the higher probability trade would be trap in as many bulls as they can and then sell it off after they have them trapped, right? Remember, the bulls are going to want to take this right back up to this area. The market always wants to come back up, all right? When the bulls have it like a day like yesterday, they're going to want to come and retest this area. Okay, it's just the way that the markets work. It's the way that the bulls trade, and it's the same way that the bears trade. All right, let's just go over here and look. All right, we talk about it all the time. Same thing, just like the bulls, the bears always want to bring it back down, right? Just like the bulls are going to want to bring it back up. Okay, and why does the market allow that? Because the market knows which way it's going. Just like we did. We said we were expecting this to come up. They're not selling anymore, right? What are they going to sell? Who are they going to sell to? Nobody. How do they get rid of their shares? By having massive moves like this and then trapping in all the bulls. Then they could start dumping their shares. Now, just to give you guys a clue, right? A little bit of like how it really, really works. Right, we cannot, our money does not move these markets one iota. All right, it doesn't matter what you say, who you talk to. The retail trader cannot move the market. All right, so look at all this, you know, after that move yesterday, okay? After that big move yesterday, boom, they're already selling their shares, right? They're selling them into strength. So we already know now, right? We were expecting this move. We were anticipating this move. We got the move, right? They've been selling already because we can't make pullbacks like that. The only thing that's going to make pullbacks like that in the market is smart money selling their position. All right? Remember, they can't dump it all at once. They have to do it little by little over time. Okay? They don't have the ability to trade like we do, right? So we want to trade with them and be smart. So if this thing is going to do anything today, it's coming up to this area, and it might even break out of that area to trap as many. Just imagine how many shares they accumulated to the upside just for this information, right? So could we see a potential run up into this area, 12,100? Absolutely, right? But we have two gaps to fill below us, okay? Two gaps. All right, the market's not going to want to leave without filling at least one, or at least coming back down. Remember how I talked about, they'll start with a small position, and then they'll possibly add on a pullback, right? So we just want to see what their motive is today, what their game is today. All right, but we do have the two gaps below us. I'm anticipating, they're going to let the bulls bring this up higher. Why not? They don't want to sell any lower, right? But the market, we know, does not want to leave any gaps below us. And right now we have two, and one of them is a major, major, major gap. All right? So we're anticipating already for that pullback to happen. All right? Now, is it going to happen today? We don't know. We'll find out. Let me just look at this on a daily time frame. All right? Now, look on your daily time frame. Look where your relative strength and your Bollinger Band indicator are. Okay, that's huge. What is that telling us, right? You see how you can start putting these little pieces together? All right? So even though our lower time frames, sure, we're getting that curl, and I'm sure we will get back up into this area, and that's when we're going to look to sell. All right? I'm not looking to buy, today I'm not looking to buy. If we get any breakouts or anything, right, they can go without me. I'm fine with that. Because today, I'm actually going to be patient and take a couple of contracts and let them run to the downside. All right? I just want to see how far we can take that. But looking at the higher time frame, like the daily, now let's go to the 4 hour and see where that's at. All right, the 4 hour, what do you got? You already got that divergence, right? Price is making higher high, we're making lower highs. All right, that's why I keep telling you guys, always look at the higher time frames. Don't just focus on the 30 and the 15 minute. Go to your higher time frames, and check, see what kind of information you can gather. All right? And that plays in perfectly to the analysis we're giving to the market today. All right? So we're on the daily, and on the daily we're all the way at the top. All right? So the daily is kind of like when I say, hey, you can short, the little bounces. Here we go again with the power, right? Right here when I say you could use this for a quick short, right? For a quick short. Well, the daily time frame is up. Now the 4 hour, we have divergence. So now we have confirmation that our thinking is right, okay? So now we're just going to be patient, right? We could trade this as a range right now, right? We do have divergence forming right here. But I'm talking, so I don't want to trade while I'm talking. All right, we have our range, okay? We just got confirmation from the higher time frames that, what we're thinking is going to happen today very well could happen today, right? I mean, all the statistics are there. Smart money's definitely going to want to take some profits up here. There's a lot of losing investors that are probably calling today saying sell, sell, sell. Right, because now we're what? How many points are we up from yesterday? 18, almost what? 900 points? Are you kidding me? Yeah, there's going to be a lot of people who are wanting to sell while they have the opportunity, right? Because we're not anticipating the market, continuing to rise with the way that everything is out in the real world. This is going to be a prime opportunity for people who have been holding, right, and worried and everything to call up all their brokers, their 401ks, sell, 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 get me out. All right, so that's even more of an incentive for them to kind of do that 1-2 fake to trap in more bulls because they're going to need these shares to sell. All right, so you see how you can almost see the future by understanding how the market works and giving some, decent fundamental analysis using the tools that we have, going to the higher time frames, right? Start thinking like, the market makers would, and how the market could work this in their favor to make money and to get rid of their shares, right? So just like yesterday, the numbers came in, but they were like, what, 0.02 and 0.01 away from what they predicted. So what do they use that as? Oh, man, it came in better than expected. Boom. Now they got all the retail traders trapped, long bias, right? And they're all sitting there. If you ever seen that movie Goodfellas where they're laughing and they have that Mimi, that's them, So, all right, so now we got confirmation. We got our zones up here.
No, you have someone trying to ask a question.
I don't see any questions. Go ahead. Now I can.
When you have the RSI divergence on the 4 hour, right? So does divergence favors a whole outcome? So basically you're looking at it to go down. And also when you're looking at it at the 4 hour, are you saying, all right, it's going to go down? So are you looking for a lower time frame for an entry on the downside?
You can. I mean, we're paying attention to the 15 and the 30 minute. All right. So here's here's the daily time frame again. They're both up, right? This one's up a lot higher, but this one's only at 64. But if we scrunch this down, all right, so it has room to go. I mean, this is like a high at 80, which is why I'm saying, they could let this rally run, because they need to sell a lot of shares. You have to remember that, all right? They have tons of shares that people are going to want to be getting rid of. At the same time, we could come back up to this area, all right? Our RSI, if you look over the course of the last few days, okay, notice how the RSI, you can pretty much use the RSI if you wanted to, and I was going to put this in the next part of the boot camp as resistance and support. All right?
Right.
So you see how every time we came up here, the RSI got hit at the same area. You see what I'm saying? And again, we haven't gone that far with the RSI, but there is still a little bit of room to run. They have a little bit of wiggle room here to run this up a little higher. This one's kind of overextended in and of itself, right? But we do have some room. And, again, I'm not really one big on these type of candles. I don't pay too much attention to candles, even though I'm going to throw them into boot camp so you guys can get, a basic knowledge of them. You don't have to ever know what any type of a candle is to trade, profitably. Everything I'm teaching you now, that's all you're really going to need to know. But I'll throw it in there. But, the candlesticks, in my opinion, the best candlesticks, which you guys somewhat know, are going to be like your tweezer tops, your tweezer bottoms, right? These are going to be your most powerful. So I will teach you like 2 or 3 candlestick types. But in my opinion, they're all useless other than the tweezer tops and bottoms. These are going to be your most powerful candlestick patterns. And then this is that one that I love on the 15-minute chart. When we do get it, is when we get a pattern, something like this right here. But typically the next candle is always green. But, as we go, you'll learn all that. There's no rush for the candlesticks. In my opinion, that all that stuff is just garbage that, retail traders think they need. But anyhow, let me get that back to the 30-minute. And then, but if you ever paid attention, notice that every time we have the reversals, right, what do you have at the top of them? On all the time frames, double tops. We've been talking about that since penny stock days. Double tops, double bottoms, tweezer bottoms. Like, those are really the only things you got to focus on. And it's the same thing on your lower time frame, right? Almost every single reversal is going to have tweezer tops, double tops, triple tops, and the same thing is true on the bottom, right? You'll have your double bottoms.
Oh, yeah.
You see what I'm saying? I would have talked about that more, but I always thought you knew. But that's really the only ones I would ever really teach you is those. And then there's that one that sometimes develops on the 15, and I love it when I see it, but this is what it looks like. It'll look like you'll have one big red candle. Well, actually, I'll start with a green candle. You'll have a big green candle, and then you'll have something like that with a wick. So it looks like you're getting ready to go long, and then it just tanks. And then sometimes you'll get the wick on the other side. Sometimes you will get that developing like that. And that's also a good pattern. But both of those two, but the double bottoms and double tops are really the only things you'll focus on. Because it's on every single time frame. It doesn't even matter. I mean, what time frame you go. Those are the most dominant candlestick patterns. Let's go to the 4 hour. Notice on the 4 hour, you got your double bottoms, your double tops, your double tops, right? I mean, it doesn't matter what time frame you go to. It's indicative of double tops and bottoms with tweezers. So if you go to the 1 hour, you're going to have the same setups. You know, your double bottoms, your double tops, right? Double tops, tweezer tops. Here, I mean, this is when, you know, this type of an area, even on the higher time frames, remember, these can always drag along the bottom, you know, when you get that price that's kind of going sideways like that. So even with this, you know, you would think that this is going to be bullish because of all the wicks, right?
Yeah.
So, you know, you want to use this type of a thing down here. I wouldn't have really been bullish on this because this was just flat all the way up until this point. This was rising, but this was not, right? So, I mean, in this area right here, this is actually the area where you actually kind of got that first little knee jerk. You know, then on your smaller time frames, yeah, you could start looking for an entry. But you don't want to rely on just wicks like this because, you know, this can always happen, right? We've seen it on here. I mean, if we go to yesterday, I'm sure this just curved for a majority of the day around that time frame. You see how this just kind of stayed up top, right? It never really left that area of 100% after that move. I mean, it did. You had your little pullbacks and things like that, and you could have shorted it if you paid attention to your average true range, right? But whenever you see a market make a big move like that, you know, this is just like that last Friday. Remember, it popped and grinded all day?
Yep.
So whenever you see a big pop like that, I mean, this is what you can always expect. You know, you can buy every little pullback, right? Or every little overextended area. Whenever you have a major move like that, you know, you can be looking to add on all of these pullbacks. But, you know, we'll get into that later. We just haven't seen too many days like that. And we're not, you know, right now, the way that we're doing the boot camp, we're not up to that yet because, right? Because the market can only do two things, right? It can channel and it can range. And it can channel and it can range, right? So let's focus on the things that are going to get you up and running the fastest. And then we'll go back in and start working on all the other things.
So bang.
Yeah.
That's the on left of your screen, right there where you're, right there. That setup right there with all the candles, is that called the liquidation area?
Liquidity, supply and demand, support and resistance, it's all the same thing. Well, areas of liquidity are, you know, I talk about every time I see them do a liquidity grab, right? I'll say, oh, that candle was nothing more than a liquidity grab, and I'll buy it or I'll sell it. But areas of liquidity are the fuel to the fire that I'm always talking about. And I'll show you what I mean here in a second. Let me just get this back to here where we are. All right, so on a higher time frame, this right here, which would have been, we would have had this marked as resistance, right? And this is what I talk about with the ranges also, right? Everybody who was short here will be trapped right here. So this is called an area of liquidity, and that's why I love trading those areas so much, because you're going to make your most amount of money very, very fast when you're in an area of liquidity, right? You can take, if you only traded areas of liquidity, you could take a few trades a day and you could make more than most people will make in a week just taking 2 or 3 trades a day. All right, so here again, right, this isn't our no trade zone, but this is an area of liquidity. Okay, if we had this marked off as like a little short range, yeah, it really wouldn't have worked making it a little short one. But that's how areas of liquidity work. You'll get that big power bar because anybody who was short has to close and cover. That's what adds fuel to the fire. Now the same thing here with this bar. This is an area of liquidity. Anybody who was long is now trapped, especially these people. So when it breaks that, it causes these massive moves in 2-4 minutes. Right? Again, big candle. Right? Here again, area of liquidity, massive candle. All right? So those areas are like my favorite areas to trade because they produce the most amount of money the fastest.
Right.
But that's really what an area of liquidity is. You know, all this other stuff is just supply and demand, support and resistance. And Russo and I actually talked about it because I didn't want to confuse you guys with, well, you know, well, what's the difference between supply and demand, support and resistance? Nothing. Like, you know, support and resistance is like on a bigger time frame, you could find your support and resistance, okay? So support and resistance is really nothing more than the current supply and demand. Because right now, in the current time, you have supply and you have demand. Now, as time goes on, instead of calling this supply and this demand, or this supply and this demand, it's now just be considered resistance and support. So supply and demand is what's unfolding in real time. Support and resistance is what's happened in the past. That's the only difference between supply and demand, support and resistance.
So you find support, supply and demand, you find that in the lower time frame.
Right, on your daily time frame, you know, what you're trading for the day, that's where you're getting your supply and demand. Notice, you know, it's being bought up here. So this is now called a supply zone. It is being sold up here. So this is called, oh no, this is called a demand. This is called the supply zone where they want to get rid of it. Right? Because it's on our daily trading time frame. Now, if we go back to yesterday, all right, yesterday's action, this is now going to be called not a demand zone, but this would actually now is going to be called support because this happened yesterday. And this is going to be called support, right? But yesterday, this was called a demand zone, and this was a demand zone. This was, you know what I mean. I'm so tired, I'm confusing myself.
I am getting that's a lot clearer than what I understood before.
Yeah, that's what I was saying. You really don't have to consider anything on any given day. Like, you know, either just call it supply and demand or support and resistance. It really doesn't matter what you call it. It's the same thing. The only difference, again, is that supply and demand is unfolding in real time. Support and resistance already happened. That's the only difference. You know what I'm saying?
What's up, man? Good morning. Good morning.
Good morning.
Hi, Be Custom.
What's up, man?
Good morning.
Hey,
good morning.
I just wanted to say, just real quick is, and I don't say any of this to like disagree, but I think there's a huge difference that's really important between support and resistance and supply and demand zones. It's basically my whole style of trading. So like, you guys are not you guys. Anyone can have 15 lines of support on a chart in a general area everywhere you see price action bounce, but I'll just have one supply zone. I think supply and demand is where the tug of war of price action is happening. I think it's where the banks are getting in and out of positions. I think it's where the big moves find their entries and exits. And if you go and draw 10 support lines on a chart, you'll notice nine of them didn't work, but one did, and that's because where that one was where the actual liquidity area was. So I think supply and demand, there's a really big difference between support and resistance.
Yeah, and you're right. You haven't been here for a few days, but like I was telling them...
I told you it's been a real tough week with work.
Oh, yeah, no worries, but just to get you caught up, you know, like I told them, all these lines on the charts, we're not going to have any of these when they're fully trained. These are all here just for training purposes only. And just what you said, we'll have our major areas here on the higher time frame, but all these little lines are on here for is for them to know where to potentially be looking to take profit. When you look left, you have to know where you want to take your profit. But I understand I understand what you're saying, but that goes back to like what we were saying last week, right? That big money is not going to want to be selling in this area. It's too low for them, right? That's why we were anticipating that massive move to the upside. So yeah, if you're trading like your higher time frame supply and demand, which we're not there as far as our trading goes yet, but that's exactly how you would do it, right? This is your major resistance, and this is your major supply or support. Supply and demand, you have your two areas. But on your intraday trading, this is what you want to go by. You know, you want to go by your supply and demand zone on your intraday chart. But yeah, all these little lines that we have here are just for training them so they know how to look left, where to expect a reaction in price. You know what I'm saying?
Yeah, and that's why I love you draw your range in the morning because that top area of it and the bottom area is a good way to learn what supply and demand really is. Because those are supply and demand zones that you're drawing on a smaller level. So that's why I love that you do that range stuff each morning because those are... You can have 20 support lines in between those two zones, but those are the two areas that matter.
Trust me, I said it last week. I'm like, all these lines are driving me nuts. But, for training purposes, this is how you want people doing it, you know? You want them to be able to visually see it on your time frame. And when you're getting ready to take that trade, I'm not sure if you noticed that we blacked out the areas here and what that's all about. But, you know, that's all part of the training as well because I only want them focusing right now on your areas of divergence on the bottom. But if you watch day 8, I just got it up yesterday, but that's kind of what we've been at since 2 days ago.
Yeah, I haven't kept it up to do for sure. That's why I started off by saying I'm not exactly sure what you said, but
oh yeah.
But my thing is supply and demand is it's very important to me, and I've seen the arguments so much that it's the same as support and resistance, and it's not. So that was the only reason I even was speaking up at work. So.
Oh, no worries. But if you look over here, we have all these marked off. But to what you're saying, yes, this would be a major support level. This is our major resistance, and we have 2 more areas above us that we could potentially look at, right?
Yeah.
So that's what I was telling them. Once they get it down, you know that all they're really going to have is your major areas to your left. And then you're on this day, you'll have yesterday's high, yesterday's lows, and yesterday's close. And that's all you're really going to have.
That's all you need. Yeah. I totally agree. We're the exact same page.
Yeah, because this just drives me up the wall. But, again, trying to teach new people how to become profitable, you have to be able to visualize. Like this one here, we only have 3 levels.
100%, man. You learn it all in these stages, but you're doing it perfect. So
yeah, I appreciate it.
So I'll let you get back to your thing. I'm gonna mute.
Oh no worries, man. So I'm putting this high over here now. All right, cool. All right, so here we are, and I just want you guys to visually see that, right? What time is it now? Now it's only 9:05. We're getting closer to the bell, right? So for this to break down here, could they come and fill this gap right now? They could, but again, what we're looking for is what we talked about up here. Now we are getting divergence, which is what I want you guys focusing on, but we're really not getting any of that just yet, right? You could start to see it happen, and again, these are all lagging indicators, so they're going to take a minute or two, But we could potentially come and fill this one gap from yesterday. But we just want to give it some time. And since we're not focusing on anything that we can't see, we're not going to trade until it gives us the opportunity to trade. But anyhow, did you guys trade any of this divergence yesterday? Did any of you make any money? Do any of you have any questions on it as far as right now?
I traded yesterday. I tried to trade divergence, and I was so clumsy. I didn't understand what I was really doing. After watching the video last night, and I kind of have a little better understanding, but I'm really not too clear on actually trading the divergence. But I did make money. I was able to make, I think I made $730 or $80, and then I closed out the day about $650 up on a $500 account.
Nice. So all right, let's talk about divergence in this range right now. All right. So if we came in this morning, right, and we identified this range, and let's just say it was, I don't know. Let's just say you came in here and it was like right here, the time of day it was, right? So you come in and you see that price is going down, right? And then we double bottom. Yet you had divergence in both of your indicators on the bottom, right? That's telling you, and at the time, I guess our range would have been a little different, right? If we had even drawn one. So let me not talk it that way. Let me just go and show you, right? So here we have a double bottom, and here we have divergence. Here we have just about the same thing. It tried once, twice, 3 times, but we got divergence. Okay, and it's in a key area. All right, so if you were anticipating a breakout of that zone, you shouldn't have anticipated it because of the divergence alone, right? You should have just traded it like a range.
So I think what I did wrong yesterday is I was actually doing the opposite of what I should have done. I should have added to the position technically. Then I was shorting when I shouldn't have been. That's where I lost like $50-something. It was going against everything.
Well, that's like yesterday, Again, what we're doing now with divergence is trying to teach you how to correctly trade a range. But in order for me to teach you how to correctly trade a range, you have to understand, how to trade a channel. We already know how to do the range, I hope, right? You're looking for specific areas, right, where price is going up, but it's coming up to a specific point, and you're getting divergence, right? That's your confirmation. You can go ahead and short it back down into the range. Same thing here. It's outside of our no trade zone. It double bottomed, and you have divergence. Excellent opportunity to run it back into the range. Same thing here, right? Double, triple bottomed and ran into the range. It could not break out. That should have been your first sign right here saying, hey, this didn't break out of our range. Now we got divergence. We're riding this thing back into the range. All right, but your profit target, again, because you guys are learning, I want you to keep it at the average true range, right? But if you were to trade this once you're experienced, all right, notice where our last high was. Now you could take your profit target. If we got 80, 90, 110, 20, take your profit target 25 points. Do half of the range. All right? I'm trying to get you guys to win every trade you take when you take them by keeping your profit small so it builds up your confidence to go forward. So that's why I'm saying use the average true range, because if you listen to what I'm telling you, you're going to win almost every trade you take if you're taking it in the right locations, right? In the right locations, if you're staying out of the no trade zone and not trading in it at all, all right? Now, again, down the road, as you learn and you understand, that's different. But here, all right, like when we're talking about the channels, when you have a bullish day, the only thing you're looking to trade in a channel is to the upside. Why? Because the odds are in your favor, right? The probabilities are in your favor. Notice on this channel.
That's where I made my mistake, because I was trying to do divergence and I was trading. The only time I lost money is when I went against the trend.
Right. So here you have price making lower lows, but your divergence is making higher highs, and that's on a higher time frame. So let's just go back and look at it from here where we actually would have been trading. All right. So if you look at this area from yesterday, let's open this up. I want to try and get it where we can see our first actual channel. All right, so let's draw our first channel, and you know me, I'll always do mine off of the high. All right, and we're going to be treating a channel just like a no trade zone. So we would have this marked off as our no trade zone, okay, and we would only be looking to trade outside of the no trade zone. I'm telling you now, this is where your highest probability, your best real estate locations are going to be, and you're almost guaranteed to win every trade you take. All right, so with what we have on both of these situations, we didn't get divergence, but what did we get? The other thing that I talk about, right, the one dip rip. All right, we had both of these come down to overextended, not so much here, but if you're trading off of the channel and you're trading in the direction of the channel, you're pretty much going to nail every trade you take. Now, if you start going against it, right, if you're trying to short it, you're going to get stuck in a lot of areas like this where it's just not moving, right, or it's not going to actually come up. Okay, if you put, let's just say you had your channel drawn out here, all right, and then you tried to short it. You tried to short it here. Dang it. All right, you tried to short it here, and then what happened? It popped up and you got taken out, right? And you tried to short it here, and the same thing, right? Popped up, you got taken out, and then it went sideways. So notice, if you're trading in the direction of the trend, you're not going to have that problem, right? You're never going to run into issues trading with the trend. But this is why I want you guys, so importantly, to understand divergence before we start talking about the channels. All right, remember, the market's only going to ever move in a range or a channel. It cannot possibly go any other way. It just can't. It's going to range or channel. And with the channels, right after we learn the channels, we're going to start talking about the measured moves, because every channel has measured moves. So that's going to be next. I mean, even on these little ones, again, I show you guys this every day, but if we draw the move, right, these measured moves happen over and over and over again. If we bring this up, we come here, right, and the market likes to move in 2s or 3s. So it's a lot of information to put together, but that's why we're doing it the way we are, and we're just starting off small. All right, so
bang, bang.
Yeah.
The channels would be the higher time frames, and the ranges are the smaller ones?
No, I mean, just like we identified this morning, right? We identified this, but now let's go back and look at yesterday. All right, so yesterday, if we started off from yesterday morning, right? We started off in this, right, perfectly traded, just like we like to see. All of our volume weighted average prices were in a narrow state, right? We were in a range. And then the second we got that news, we went from a narrow state to a huge, super wide state. And typically you're not going to see that, right? Typically you're not going to get a big move like that. But from there, we went into a channel. And then from that channel, we went into a range. And then from that range, we went into a channel. You see what I'm saying? So you went from a range straight up to a channel, to a range, to a channel. And then from there, you went into another range. So you see the difference here? You get we'll call this just a tiny little range and then a channel. Okay, then we went into a range, and then you could call this a little channel, but then it became a bigger range, right? But that's all the market will do. It'll either range or channel. That's it. So
it seem like it almost seems like it was easier to trade a channel, recognize and trade a channel, or
channels are excellent to trade, but you know, the type of market that we're currently in, being up, down, sideways, you don't know what they're going to do, right? It's, you know, you
Right.
definitely, you can trade the channels, yes, but just trade the direction of the channel, and remember that channels like to make, you know, the market likes making moves in 2s, 3s, sometimes 4s, and sometimes 5s. All right, so thinking of it that way. All right, if you're going to trade a channel, after you get move number 1, there's like a tiny 1, 2, 3. You know, look for your divergence, look for your pullback. Now that you got that, now that you had that channel, now you just automatically draw a new line. Even without this information, this was the lowest price outside of this channel. Okay, so now you draw the bottom of your channel. So when price comes back to it, all right, you can start looking down here for an entry. All right, so let me just, it's going to take a few weeks. That's why I said we're going to spend 2 weeks just on divergence before we get into channels, because I really want you guys to understand divergence before we start talking about the actual channel. All right, so here we filled yesterday's gap fill, mission complete on that. Right, remember we're anticipating to have a decent pullback today, but not without, you know, taking some bulls out with us. All right, so if we look here now, let me draw this a little bit different. Well, not different, but if we took this out here, and I don't know, something like this. I just like to keep these kind of identical. So if we look at this now as like a big wide channel, well, that's not going to work. Let me go with their tools so we can move it. All right, so if we take this and bring this right to here, come on. We're most likely going to break out of that right now, but for the purposes of what I'm saying, you just want to put that where price stopped and turned around. And if it changes right now, then we change it. All right, so now that we're in a downtrend, you're not looking to go long, right? Even though in a channel you're anticipating it to come back up. But why fight the trend, right? Why get in it and then take the chance of it going like this and then taking you out and then going like this before it comes back up, right? The easiest way to trade any channel is to just trade it off the tops in the direction of the trend. All right, so even now that we broke out of this range, what would you be looking for? And I tell you guys this every day. That 1, 2, 3, right? So remember, that's just the way the market likes to make its patterns. All right, it doesn't like to leave an area without retesting an area. Does it want to do it every time? No. But nothing in the market is guaranteed, right? So your higher probability trades are going to be taken up here, but notice what time it is now. It's 9:20. So now we should be preparing, and this is going to be another huge one, but our 8:30 to 9:30 box, right? Get that ready. But again, the bulls are going to want to take this back up, right? That's where the bulls are going to want to come. The market makers are going to want to rope in as many bulls as they can before we come down and see that gap fill from yesterday. Remember, that's a several $100 gap fill. This is huge. Massive gap fill. Are they going to do it today? I don't know. Are the odds in our favor of them doing it today? Yeah. Right? But we also still have to keep in the back of our mind this area up here, 12,150, right? They're going to want to come and sell as high as they can, right? So are we just going to tank real quick at the open? I doubt it. I don't know. But what I'm planning on is the bulls bringing it up and possibly bringing it up even somewhere in this area so they can continue selling it off, right?
Do you plan on taking that trade?
What's that?
Do you plan on taking that trade back up?
I'm not taking any trades to the upside. No, I'm going to take them to the downside today.
Okay.
Only because, remember, we've been talking about this for the last several weeks about today, yesterday, or the inflation rate day was the day we were expecting that big move because they weren't going to want to sell down here, right? They were going to want to sell up here, but I think we said this before you came on today, right? A lot of people out there that have been concerned and have been losing a lot of money, probably been on the phone with their brokers all day saying, get me out of my positions. I don't care if you think we're going to go higher. I just want to take, money off the table now. You know what I'm saying? Now that we did.
I was on one.
Oh, okay. Yeah. So
I was just curious if you were going to take the rip back up and then short it.
I'd rather play it safe. You know what I'm saying? I'm just a more conservative type of trader, right? I don't like to really risk too much. But to ride it back up, if we get a nice breakout and a retest, yeah, I might ride along with them. But in this specific area, no, I'm not going to really trade at all, until we really get a definitive direction. Or if the indicators tell me to take a trade, I'll take a trade. But I'm not looking to, right now, potentially to ride, like a huge rip or anything like that. No.
Yeah. Okay.
But that's just me, I mean, like I said, what I'm teaching you, and once we get to that point, then we'll take trades like that. But right now, I just don't want to do it just to not do it and, get everybody, oh, well, I want to do that and make that too, But to do that, I'm just going to trade what everybody knows right now, if we're going to take any trades at all right now. But as far as me personally trading, no, I'm not trading at all. At all. I'm actually about 4 hours into day 9 now. And day 9, we're actually going to be bringing this peekaboo tent up to the 50% area, and we're going to focus on the entire 50% of the bottom area. So, and then after that, we're going to black that out, and we're going to focus on the top half. And again, once we're through that part, you're going to see why I'm doing it this way, right? This is just to get you to focus on divergence only, because the less you have to look at and focus on, the better your trading is going to become. And once you can get this down, it's just going to be second nature, right? Just like every time I see a trade when we're live and I'm like, ooh, I'm going to take that. I just see it right off the bat and I jump on it. But this morning, all of this just came from divergence only. That's it. 4 contracts each time. This was nothing but divergence. So, if anybody's got any questions, go ahead and ask. I'm going to sit here through the bell for a few minutes anyway. But like I said, I'm expecting this to, have a decent pullback. But are they doing it now, right? Is this their pullback? And notice here we are again, right in this zone. But now this is what we're going to start talking about next. Is when you see this, where this comes back up to the 50% mark. That's where I would take another major selling point. When this stays down here and this pulls up and it comes to that 50% line, I'll typically go 3, 4, 5 contracts to the downside when I see that. When you get a nice pullback like that. Because that's telling you that it's still weak, right? And that this is a false pullback. But we're not there yet, so I don't want to get into all that stuff. And again, right now we're too close to the bell to really do anything like that. But if you guys got any questions, please ask away. And I know you're anxious and you want to trade, but trust me, at the end of the training, you'll be in a much better position to have all the pieces of the puzzle and put everything together. If you're listening to what I'm teaching you, each time. By now you should all know about how to trade a range. There's no reason you can't practice range trading every day with divergence and make this kind of money. Right? There's absolutely no reason whatsoever you can't now officially, successfully trading a range. And now if you're taking bad trades and you're losing and you're trading channels, well, then you're getting ahead of yourself and what we're teaching. You know what I'm saying? I mean, we're just now starting to talk about channels, but I really need you to understand the power of this, right? The power of these two indicators. Because once you understand the power of this, it's going to make trading this so much easier. Right? Now, just what I was saying about this, notice that move to the upside failed, right? That's, you know, a huge indicator when this moves up and this doesn't. But it's excellent for taking quick scalps, you know, quick in and outs. But that was a pretty decent move right there. And now, you know, if we're going to go back to the upside, again, we're just too close to the bell, but we'd be looking for that divergence, right? We'd be looking for that divergence where we could actually physically see it to take the trade back to the upside. But if you guys would just focus on, you know, your ranges and divergence, and now that we talked a little bit about the channels today and you see divergence developing in a channel, go ahead and try and practice it for now, you know. I mean, we're working our way into the channels, but I just need you to understand divergence. You know, just trade divergence only. Get 2 weeks under your belt of doing nothing but trading divergence. Identifying it, spotting it, seeing how it works, right? I mean, we had this triple bottom. Boom, boom, boom. With divergence. Just learn to identify that, right? All this, in the end, my end goal is to build patience in you. To get you not to take every trade because you see it going down. I want to jump in that. That's not how professional traders stay professional traders, right? It's patience. It's waiting for the right time in the right place and the right setup. You know, just thinking you have to trade every second of the day is why so many traders fail, right? They just see, oh, it's going down. I don't want to miss it. It's going down. But then they'll wait, right? They'll wait until it gets here, and then they'll want to short it. And they're like, why didn't it work? But anyhow, you know, coming with the channels, you're going to have the measured moves. You always want to trade in the direction of the trend. Here's your first leg, your second leg, your third leg. Market likes to make moves in 1, 2, or 3, sometimes 4 and 5. So even to short this now, right, where would that put us? Do we have anything marked off? So that would be 1, 2. I don't know if that's an area over here. Well, actually it kind of is. Tiny little area that fourth or fifth leg would bring us to. But let's see what they do with the bell. There's our bell zone. 1 minute away. Now, if we get a big drop and we get both of these buried, I'll take that to the upside. But again, I'd be looking for them to rope in those bulls. Right? The bulls are still going to want to bring this right back up. Right? And then they're going to be selling into that. But we've had a lot of selling going on in the overnight hours, so they might not even give them the chance. I don't know. But like I said, you know, we're in an area now where they're going to want to clear their inventory, right? They're going to want to sell their vehicles. They're going to want to sell their product. They bought it down here, right? They have a lot of inventory. They want to get rid of it. So let's wait and see. Do we get divergence? Remember, these are lagging, so give it a minute to finish developing. All right, we don't have anything here. We're already below, right? We're in this area, so there's not much fuel to keep this thing going down. Right? Remember, we're looking for areas of liquidity And right now, to the left of us, we don't really have any areas of liquidity that's really going to force this price to come down with such force. So the divergence is starting to look better and better as it's forming. I'm actually going to put a buy order right there. If we come back down, now you see how that's failing because we don't have any fuel. So here they're trying to rope in the bears, but we had an awful lot of selling going on prior to the bell, right? So if they took a big chunk off the table there, then they're going to want to let it come back up so they could sell more, right? That's the name of the game. Sell high, buy low, right? But they bought low here, so they're not interested in buying anymore, especially at these prices. They're interested in selling. Move that down. Tiny bit because that's a new candle.
Order filled.
There we go. And then I'm going to come just a little bit back up there. Move this down. Get it out of the way. Where is that next area? Put one more right there. See if we can't get that filled. Come on. No, it doesn't look like it wants to fill it, but notice the difference is in the two, right? This one barely came back down while this one almost did. So we were very short away from getting filled on this one. I mean, it came within a couple of bucks on that one. All right, and I took that trade based on nothing other than the fact that we had nothing to the left of us to really cause this to come down. Nobody's in a position to add liquidity to that trade, right? So other than the new traders that are pushing this down now, but again, you know, this is not indicating a move lower. So we had all the ingredients we needed, so we just made what, 30, 40 bucks on that one contract? I'm actually going to take this. Actually, let's just see. I mean, everything's still looking good. Again, these are lagging, right? These are lagging, but now it looks like it's starting to form. We did break to the downside, right? We have that major gap to fill below us, right? But in my opinion, I would see them bringing this back up, at least to test that area, right? At least to come back up here, if nothing else, right? The bulls are going to want to bring this back up here, and the market's going to allow that because they're going to want to sell it up here. All right, so always keep that on the back burner, right? Is it going to happen? We don't know, right? But the odds are there for it, but we do have that major gap below us that's going to want to be filled. That's a huge, huge gap. But like I said, this is such an area to be selling, right? I'm just keeping an eye on this. I wanted to move that, but I'll just bring my take profit down. There we go.
Order filled.
So another 15 bucks off of that one. But right, again, that's just the things I really want you guys to focus on, you know, is where are we in relation to yesterday and today? How much did we move on a massive move like this? All right, after the economy's been going through what it's going through, you know, a lot of people want to get out of their positions. They want to put their money into either cash or gold or, you know, something other than the market, right? Nothing in the market's really that good. Even Bitcoin's tanking. So you got to prepare for stuff like this, right? But normally we would have definitely looked for that move back up. And I'm still anticipating it, right? I'm not counting out the bears. I mean, the bulls after a move like that, right? But what are they going to want to do? Like I said this morning at 3 a.m., right? Look for that pullback almost enough where it feels like, you know, is this a reversal, right? So, you know, we got this area right here, possibly here, but the biggest part that I want you to understand is that we have that gap to fill below us. And it's actually like this big. All right. So if we come and just come down to here, that doesn't close that gap. Closing that gap means we come back all the way to 10,900. And like I said, typically that'll happen within 24 to 48 hours. But sometimes we could go a couple of weeks before we come back to that area. But what I can guarantee you is that we are going to 100% come back to this area. Whether it be today, I don't know. Right? Like I said, this is a prime real estate location to sell. So you might say, how come we're not selling it? Well, we just traded twice to the upside, right? We didn't go to the downside. But the reason why I'm not yet is because, like I just said, I mean, there's really nothing other than the major selling we're expecting going on, right? Getting people out of their positions. But most people, like I said, are probably taking profit up here, trying to close their positions out in their portfolios, trying to take advantage of that huge move, right? So this is just like a little break or rest. Again, the bulls are going to want to bring it up here. Are they going to make it? I don't know. All right, but I wouldn't be looking to trade to the downside until we at least retest one of these areas. All right, if it keeps going down and goes down, I could care less. I got my whole life to trade, right? And that's what I want you guys to focus on. Don't focus on the money. Don't focus on, I'm going to miss this trade. Man, you got every day of the year to trade, right? Wait for the best setups, right? We're overextended to the downside now. I want to trade to the short side, but I don't want to do it here. I would rather do it here if we were up above here with divergence, or here, but this is my number one location that I'll be looking for, right? But again, there's really nothing here. Just like I said over here, right? I said there's no reason for the price to keep going down, right? Because who are they gonna sell it to, right? They want to buy down there. They want to be buyers, but it's the same thing on a micro time frame. You know, there's really no rhyme or reason for what's going on right here other than, you know, like I said, the retail investors or whatever calling their brokers saying, hey, sell all my Apple, sell all my Tesla, right? We came up, we made a massive move. Get me out of my positions. I don't care if I took a 30% loss. It's better than the 80% loss I was at, right? So that's why I'm saying this gap to get filled is going to get filled, right? We were anticipating this big move higher, but now we're right back into that, hey, let's sell this territory, right? I mean, 800-900 points, almost 1,000 points in a day. Oh, yeah, you better believe they're going to take profit. All right, so now we're getting that pattern, but I want to see us up here, right? And this is why I blocked this out. Now, are you going to miss trades? Sure you are. But what are you going to do? You're going to focus on the best of the best trades. All right? You're going to learn to understand divergence and where you should best play divergence. All right? Again, this is just two pieces to the puzzle. All right? This is nothing more than part A, part B, part C, and part D. But once we start talking about the middle 50%, you know, it's going to get more complicated and complex. And I don't say that to scare you, but I just want you guys to learn it the easiest way possible. Focus on these two areas now. Trade your divergence. And just go from there.
Bang, bang, bang?
Yeah.
Is that your tweezer bottom?
What's that?
Bottom?
Yeah, this is... It's not a tweezer bottom. It is a double bottom. Absolutely. The tweezer bottom, it's really no different. It would just have, both of them would have the tweezers like that. So it looks like a pair of tweezers. And then you got, you know, you have this divergence here. But again, you know, what are we looking for now, right? To come here and come down, or to come here? You know, I would personally be waiting to trade in this area and this area. I would at least want to see both of our divergences up here. Right? Both of our indicators. I'd want to see the white up here and the yellow up here. If I can't see them up there, I'm just not going to trade. Right? Because when they're when they're in these zones that I want you to focus on, the odds or the location or the real estate is in your favor now. Now you should be looking for a trade. When it's in the middle, this is kind of like the no trade zone. The odds in the real estate are not in your favor under the conditions I'm teaching you right now. All right? If that makes sense. And I know, some of you are further along than others, and it might sound weird, and you might be wondering what's going on. But there's a reason. And once you see the whole reason, you'll understand why, right? Just take baby steps. Get to learn the basics. Learn divergence. All right? Trade divergence only. All right?
So you're waiting for the I and the pound B to get the R side to get over the 40.
Right. So I'm looking to see it up top here. If I see that there, and then I see this up here, now I'm getting ready to start looking for an entry. Again, I'm looking to trade in this area or in this area. Right? The two areas above us is where I'd be looking for that pullback. And we don't need that anymore. But I don't want to trade it. Right? I don't want to take my position until I see that we're trading up in this area on both of these. Right? If we never get there, well, then I don't trade. No big deal. Right? But now that we have these blocked off and I can't see them, I'm not going to trade just because, I know what's going on. And, you know what I'm saying? I'm going to trade just like you guys are trading. So here we have a trend line. And again, we still have this trend line. Right? The higher trend line. And notice where that brings us. Right? Right back into that area that I'm looking for. So, do we get that 1-2 here? I would much rather play that 1-2 here, right? And I would love to play it here. But I'm not going to touch anything until we get these up here where I could actually see what's going on. Because once they're up here, then, the playing field is more level and the odds are in our favor. But when they're in the middle, it's just like trading in the no trade zone. Right? But we do have this trend line. Alright? We just drew it out. Right? So you could trade off of that. You could treat it, but I wouldn't take that trade because you can't see your indicators. Right? Trade, if you could see your indicators, take the trade. If you can't, don't take it. Alright? And it's building up a few things. First of all, it's building patience. Right? And second, it's building discipline. And those are two of the biggest things you need if you're ever going to make it in this game. If you're just taking a trade because you don't want to miss a trade, well, 9 times out of 10, that trade's going to go against you, and that's why you're not going to make it. So the reasoning, it's more than what you see or what I'm saying. It's kind of like when Miyagi was teaching, and I'm using Miyagi because Russo sent me a Miyagi picture or something. But remember when he was teaching them wax on, wax off, he's like, what the heck is this? And when he was doing the nails, he's like, I'm never going to use this information. And then he couldn't believe later on when he was fighting how it all came into play. Well, it's the same thing. Now, see, you couldn't see your indicators, so if you shorted that, look where you'd be right now. Right? You'd be boned. Why? Because simple fact, you had no information available. And this is why I'm doing this, is to build up discipline, patience, and give you guys the best probability setups in the best areas. Those areas are going to happen in this area and in this area, and understanding what you're looking for in this area. Now, you see why you shouldn't have shorted that? And I said I wasn't? Because I had no information to short it on. And why didn't we have that information? Because we blocked it out. So hopefully now you could see, right? And this is why I'm saying, I'm not looking to short it down here for several reasons. No liquidity. No real reason for this move other than, they are starting to sell, which is a good sign. But I want to short in a specific area. In this area or this area. That's where I'll start looking to short, and only if we can see our indicators. Alright, so notice we're up to this area and we really can't see them yet. So what does that tell us? That's telling us that the odds are pretty high that we're going to see the move back to this area, which we're anticipating. And that's where we'll start seeing our indicators again. Make sense? But that,
for me, it takes me a little time to keep watching the video over and over to like see it.
well, yeah, keep watching day 8, but we're not talking about anything but divergence. I mean, I'm talking more about this, but this is exactly why, like I'm saying, all right? Just like I said, we're going to be go in the direction of the trend, right? But only take it when you have divergence that you can see, because it'll save you from stuff like this, right? But not only that, right? I hope the way that I'm speaking is actually teaching you guys, you know, like why wouldn't I take this area? Why did I say I'd rather short here or here, right? Why did I say that? Because like I just said, there's what do we have that caused this to even come down in the first place, right? Other than to try and get some people out of their long positions, right? So I wasn't looking to short this to begin with, but this is exactly why I want you guys to focus only trading in these specific areas and stay away from areas where you can't see. Even though you have a channel, right? You don't have enough information to take that trade. And that's why I said I'm not shorting that there, right? I have specific areas I'm willing to take a short, but I'm waiting for this to tell me I got the green light, everything's lining up, go ahead and take that trade. On this one right here, I didn't have any information. Other than, yeah, I mean, we had a double top, but like I said, looking left, there's really nothing there, right? So there's nothing there. Everybody in the market's 100% bullish. I'm not looking to fall into the bear trap, right, of falling down here. You know, I'm pretty sure 90% of these people who bought SPY, QQQ, who are short, are still holding their short positions right now, right? So where could we see the big move to the upside? Well, right here would have been the first one, which we're seeing. But once we get back up into this area and this area, that's where we're going to see a massive move, which is what I'm anticipating for this to happen. All right, I'm anticipating once this area of liquidity hits, we're going to rock it up here, and this is where the market makers are going to hit everybody to bring it back down. All right, it's kind of like having a football team and a baseball game, right? You have to develop a game plan and stick to your game plan if you're going to have a chance in this industry, right? Like, you know, we can talk about all this all day long, but you have to use your basic knowledge. Where were they buying? We made almost 1,000-point rip to the upside. Is this not prime real estate to cash out? Yeah, it is, right? So the next part of putting the pieces of the puzzle together is where would you be looking to sell, right? Well, how does the market like to work? The bulls always like to try twice. Okay, just like the bears always like to try twice. Okay? So remember that, right? Bulls like to try twice, bears like to try twice. Twice is nice. All right? So now we're coming up. We're starting to see some indicators, right? Just like I said, we'll probably start seeing them around here, if not around here. All right? So it's now we're in an area where I could start looking for a short, because now what did we do? We did the pattern that we're always looking for. The break and the retest. The break and the retest. The break and the retest to come back down. Alright? So even though we broke out of this, and you're really only going to learn this by coming with me every day and hearing it every day. We only broke this to the downside, right? This is one of those areas where you really don't want to be shorting, especially when we have nothing to the left of us to keep that short going, right? You have so many bulls in the market, and you know the bulls are going to want to try twice. Okay, we did not try twice yet. All right, so you just want to put as much information in your corner as possible, all right, to develop the best game plan possible in order to trade. Yeah.
Right now, do you see, I'm trying to understand divergence. Right now, do you see divergence in the RSI?
Not yet, no.
Okay, all right.
So let me,
yeah,
the only thing I would trade right now would be a quick scalp, because both of them were overextended, but I already missed that. See, when they're both overextended like that, you can always grab a quick scalp and look at That was a 88, and it's still going down. But you got a $23 true range right now, okay? So if you did that when both of these were overextended and you closed it out for 10, you would have easily got a $20 profit on that quick scalp. Right? So that's why whenever I'm scalping, I'm definitely looking for half or less of the average true range. Because in theory, you can scalp every single bar. But I don't want you doing that. I want you paying attention to this area right here. Alright, so right now we don't have divergence yet. And remember, alright, divergence is going to come. It's not going to happen like you're going to see it in real time, but you could get faked out. Which is, again, imperative to how you understand the markets and where you should be looking for your trades. Like, here I'd be looking for a trade, but I would be much more interested in this area. Right? But we have this area of liquidity right here. Okay? That this is going to make a nice rip to the upside. Now, could we trade it to the upside? Sure, we could, but I'll tell you right now, I'm not going long when we're at the top of this on our indicators. Right? Time to go long is down here. Alright? And if you wanted to, like we said, if you bought on divergence, right, you can sell once you see it up top. Right? So you could have potentially got a 100-point move on this right here. Especially when you're anticipating it to do what it did, right? We were anticipating it to come here or here. But I just, I'm kind of all over the place and I don't want to be. But I want you guys to understand how the market works, right? I draw this pattern every single day, even in the pre-market game plan. 1, 2, right? Or 1, 2, right? Even in the ranges, right? When it breaks the range, here's the range. 1, 2, right? And then down. But again, it's just this area. If we do get that divergence, now we want to wait for the actual divergence, right? We want to wait for the actual divergence to happen. We don't have it yet. All we have is a curved line, right? This is all we see right now. That's it. We want to wait for it to come back up and actually get divergence. So what would that mean? That would mean this would have to come down and the price would have to come up in order for us to get true divergence. And that's even furthering what I'm looking for in this area, right? This is where I would be very, very interested in going short and holding it for the day, or at least until we get back down to this area. Because, like I said, there's a lot of selling going on. 1,000-point move, people are taking profit. All right? They're taking profit. Now, are we going to get that? That's what we're just going to have to wait for, right? Now, let's see if we can hold this area to come back to the upside. But this, again, this is why so many people, it's the simple fact that people are not patient, that they lose money, right? That's one of the biggest reasons people lose money, because they think they have to trade every single trade, all hours of the day, and they just continue to lose money. Just be patient and wait. So right now, let me get this on a different color. Right here is where we should, if we're gonna continue up, see that upward move, get that new high, and then get that divergence. Oop. That's a terrible color. Stick with green. But since we don't have any information, there's really not much we could do, right? Now don't forget, don't discount your higher time frames for the same type of information. All right, they're trading at the bottom, even though your higher time frames are at the top, indicating a pullback. These are relatively low, indicating, again, confirming that we're looking for more upside potential, right? Remember, they can't unload the amount of shares they need to unload all at once. So this was, you know, a nice unload for them. Now where they're going to want to unload again? Up here or up here. Right? But I'm willing to, if we get the right divergence, I'm definitely willing to short. But I'm not going to do it right here because this is an area of liquidity that's going to cause us to move higher very quickly. And that's going to trap in all the bulls, and then that's what I'm looking to sell. So where is this line from? That's just our ascending wedge. All right, and if we do come back up here, look how that brings us on the ascending wedge. Okay, we broke out of it. We come back up to it. So this area is very key. And notice where it did that, right? Our area right here. Why did I pick that area? Because it stopped here. It came up to it right here, right? And then this candle closed at it. All right, so that's an area where you should be looking for that bounce back to the upside. Does that make sense to you guys?
Yes, I see that.
Yeah, absolutely. I'm talking to Russo. Oh, okay, I see you, Russo.
I'm right here.
I have it lost. So, let me shut this recording off. I don't want 10 hours on here recorded.